Tuesday, May 20th, market analysis, Stan Ehrlich. Good morning. 10:08 California time, just a little bit late this morning, starting up usually between 9:45 and 10. So, I start out with the stock market indexes, go to futures markets, and currently I'm following about 4 different stock symbols. Apple, Tesla, a couple others. So, what have we got? Well, in the last week or two, we've come up very strongly. We got overbought. We started bumping into resistance areas that didn't stop the rally. So today, again, we have a minor new high, and that's been happening really ever since a minor new high on April 14th, 15th, 16th, 19th, Monday, today, Tuesday, the 20th. Not much progress. Loss of upside momentum, overbought conditions, and generally speaking, there's no particular exact resistance level that I could come up with right here. Nothing really good, but we are in the general zone, a broad area, time-wise, from October of last year all the way to late February of this year, where the market did top out and have downside corrections several times until finally we had a very big one that bottomed out a month ago with a bullish engulfing ER buy signal. That's the green bar. Totally automated, 100% period. Signals and trades. Bullish and bearish, stocks, commodities, forex, crypto, Bitcoin, whatever, you name it. And you can also trade options against it. So we have a higher high today for E-mini. All we need to do now is go below yesterday's low, which it did yesterday during the day, but at the end of the day, the final tick on the close was a little bit higher than yesterday's close, last Friday's close. So we did not have an outside down day. The down didn't happen. It closed up a slight bit higher. So for a short while, we did have bear signals, but on the close, the final say, no signal. You might have had a couple trades during the day that might not have worked out. Small losses probably. There was no big rally anyway. But now we have the same situation happening again. We have the higher high, we're overbought, and all we have to do is get below yesterday's low. So that's what I'm looking for. Doesn't look particularly likely at the moment. The 1-minute chart on the E-mini came back here in the last, half an hour or so, back into where it was trading most of last night and this morning. This market is waiting for something. It doesn't have a direction at the moment of any significance. It is very delicate. If we had some significant bullish news, it probably would rally sharply. But if there's a little bit of bearish news, we've been up a lot and we have been overbought for a week plus. That could cause a very sharp, quick break. A little disappointing. Doesn't have to be bearish per se. It could be less bullish than expected. If the number is supposed to be 10 and it comes out of 5, that's not so good. All right, next. Spider, same story, except we don't have an outside or a higher high today. We have a doji because it, of course, opens at 6:30 California time, not like the E-mini, which trades 23 out of 24 hours for most days. So, doji. Now, yesterday was an outside up day, and sometimes I mention something I call, for the lack of a better phrase, a bass-backwards reversal. Normally, if this had closed lower, it would be red, and I'd get an official sell signal, and things would be peachy keen at the moment for the SPY. Didn't quite happen, came super close. I am looking for a break. There are gaps to close below the market, and also in all of the indexes, not just the SPY. Next, same thing, sideways since the opening, minor new high, didn't go anywhere. A little bit of the new lows, didn't go anywhere. Sideways for the moment. Never turn your back on the market. It's always going to do something when you don't expect it. That's why you should have stops or alarms in to bring to your attention something that's happening on a chart that you may not be looking at, or you're not in the same room, for example, as your computer, and you can hear the sound, the alarm, or even a trade for that matter. Sideways, QQQ, Doji, like SPY. Next. Sideways, a little stronger at the moment, minor new high for the day. But this is just, look at this. 1, 2, 3, 4, 5. Today's the 6th day that we are essentially above 515 and for the most part below 521. That's quite a few days to be in a fairly narrow range. Next, you've got the daily data chart on the NQ. About the same, except it has the longer trading hours, remember. So we do have a tiny higher high, and we are very close to a resistance level that looks fairly important. I've seen better, but it's there. So now all I need to do is get below yesterday's low, and then we would have a red bearish signal. But it's got to stay lower on the day, which yesterday they did not. Next, okay, a little bounce, same as the others. Higher high also today in the YM, overbought also. These indexes are very, very susceptible at this point, in my opinion, to a sharp break. And it could last a while and be pretty substantial, not just a little one. A little one might be down to, close this gap at 41,611, and maybe back down to the support area. But below the support area, you've got something like a 50% retracement for a 1.5-month rally that was pretty substantial, which, by the way, on all of the indexes, I got bullish engulfings either at the lowest low, I think that was the YM, and no, it's not, sorry, one of the others, Russell maybe, and on the April 7th date or on April 9th. Most of them were on April 9th, and that was almost the lowest low. So I think we're about to turn down. Next, same thing, a little bit of a down slant here, not really too much, and it keeps bouncing back up. It ain't going to go very far, very fast this way. Next, Russell, daily, slightly higher than yesterday's high. Now, this is good enough. I have been overbought within the allotted number of past days. So if I have an outside down day or a bearish engulfing today, even though it wasn't overbought today or yesterday, I will still get a red bearish engulfing ER sell signal. And I've got to point out that if you get below yesterday's lows, you'll be very close to making a new low for 1, 2, 3, 4, 5 previous trading days. There's going to be some stops down there. Next, RTY, Russell, momentarily making minor new highs. Nothing much. Going back to the daily chart. Yeah, it's still, not that great a deal. Now, if we close above 2127, that could be interesting because then you are above a resistance level that has so far stopped the rally. And you'll have a new high close to the move up. And you'll be very, very close to making a total new high, which we might even do at the same day. Okay. Bonds held at the major bull trend line. Did have a buy signal that didn't work exactly the way I would like a couple of days ago. And we are currently trading almost unchanged. I don't like the fact that it got above yesterday's high and came right back down to around unchanged. We've got to start climbing, especially, of course, on a closing basis. Otherwise, this is not going to hold and we're going to break this. So right now, I'm just waiting. But my inclination, because of the almost oversold lately and oversold definitely a couple of days ago, and bouncing off a trend line, and a possibility of a double bottom, the first low having been on April 10th, April 9th. Those things cause me to believe there's a little bit better likelihood that we're going to start our way working up some, and that would be the resistance level of 115.5, and maybe up to 117 2/3, possibly even higher. Next, notes do have a low, which is a bullish engulfing ER buy signal in green to the exact day so far. And it is up a modest number of ticks. And it's staying there for the moment. and it made it higher than yesterday's high. So this is doing better, especially since the green bullish ERSignal is the exact low day so far. Okay, friendly, looking for gaps to get finished closing, looking for resistance to get tested, and then we'll see if it can get above this resistance area, which would be a close above 111.11. Yeah, that's good enough. So what about crude, heat, unleaded, and then gold, silver, platinum, copper, beans, oil, meal, corn, wheat, cattle, hogs? Yeah, and then the stocks. So crude, up a little on the day. Doji, it's getting stuck in this support resistance zone. It got up into the middle of it or so, came down to the bottom, held, and now it's slowly working its way slightly up. Let's see which way it breaks out. That's the way I'm going to go for the next significant move after an upside breakout above 64.60, and that's a close above 64.60, or a close below 61.10. I meant 61.10, especially below that low of 60.06. Yeah, I like that. 60.10. All right, so I'm waiting. I favor the downside here because we did have an overbought condition, and it was above resistance, but it didn't stay there. It immediately dropped back into what was support, and then dropped below the support, and that was Friday last week. Monday went down again, and today it's resting a little bit. We got a doji, and it's up very slightly. So will the resistance stop on a little bit more of a bounce? I think so. And will it make new lows? Probably, in my opinion. And are we going to work our way back down to about, let's say, below 195, 1.95? Probably. Next, natural gas. A little bit of a surprise. Big rally today. Not quite a bullish engulfing. Did not get below yesterday's low. But I told you about the gap yesterday, and that's already closed the next day, today. Boom. So this gap yesterday has the location it's happened in is where an exhaustion, a downside bearish exhaustion gap might be. It's the day it ends up finishing a decline. Usually those declines are very sharp and very pronounced, not quite as small as this. You could call it a baby exhaustion gap, so to speak. It totally depends if we're going to work our way higher in the next several days and how much. But that's where it should be if it's going to be. So I'll call it a baby exhaustion gap for the moment. I'm turning neutral. We could rally back up to the top of this little range here easily enough, 3.8. We start making new lows. This line is probably not going to hold, and that is a neckline. We have a head and shoulder top formation that I started to talk about over a week ago when we were topping out. The price level is almost exactly correct, terribly close. The timing is just 2 days late, terribly close. If I was going to put in a textbook an example of a head and shoulder top in progress before it broke out, this is it. So my major expectation is very soon, that little gap is not going to be called a baby exhaustion gap anymore. Well, kind of it already is. You can't take it back. So I think it's going to rally no significant amount, break below today's lows and yesterday, and break the neckline. The minimum downside objective is very substantial. It's actually a little bit below 1. Next chart, gold. Nice rally today, up pretty good. Outside up day, bullish engulfing, off of a little support level. Nice. Oh, I suppose it could rally up a little bit more. I'm going to call it 3.4. That would follow a little bear trend line that we've started here. That's just modestly interesting for the moment. Yeah, 3.38 next day or two. But we have started the lower highs and the lower lows. So rally or no rally up to no new high. I do expect it to break the lows at 31.22 and come down to significant support just a little bit below 3,000. Next, Nice rally, outside up day, bullish engulfing, same thing. Implication, more strength. What are we going to do when we get to the high of the resistance area at 3350? Maybe stop. This is not that big a deal. Bullish and bearish engulfings happen a lot, and they do very often, more often than not, cause a little bit of strength or a little bit of weakness. Sometimes, very rarely, are they major turning points. And under those circumstances, when you look and find a green bar or a red bar, then, or a green bar, you're talking about, and that one didn't work, the red bar. And then you're talking about the probability of a very substantial move because it's an ERSignal. Next chart. Wow. Platinum took off like a bat out of you-know-where. So, new highs since early February. All at once here in one day. All of a sudden, we're overbought. All of a sudden, we're getting very close to a resistance area that's very significant. And I think all of a sudden, it's about to turn back down again and get bearish. So will it reach resistance? Maybe. 1068? Maybe. A little higher than that, still in the resistance area? Maybe. But is it going to be overbought when it does it in the next day or two? Probably. So we are setting up for the potential of a turn back down. I wouldn't do anything about it quite yet. Next, high-grade copper, doji, inside day. Dojis mean uncertainty or lack of interest or whatever. And we're about unchanged to make it worse. So I really can't say too much about copper at the moment. We're still between a rock and a hard spot. Pass. Soybeans, oil, meal, corn, wheat. Well, today's almost identical to yesterday. Basically, I'm disappointed that the rally didn't continue last week. It did get overbought. It did pull back a little bit. There's no major damage done. A close below 1035 is not going to be appreciated. I think we still have a head and shoulder bottom building here. The neckline is up around a little bit over 11 flat, 11.067, something like that. And the upside objective is very substantial at 1240. So, just won't move today. I'm waiting for an upside breakout. I'd like to close above Friday's high at a minimum, certainly above last week's high. I would not like to see it close below 1035, the lows for the last month or so. Although at the moment, if it does that, it wouldn't be disaster, but it sure would point in the wrong direction. It would imply it'll come all the way down here to another support area, which I don't see as being likely at the moment. Soybean oil bounced off some support on a break on Friday. Managed to rally a little yesterday. Managing to hold on today. And most importantly, dipping into support and coming back up out of it. That's good news. Not good enough. It's a doji. I need it to close above Friday and yesterday high. Then we might get some strength coming in. We did cross the neckline. It did close above the neckline on May 13th. 100% of the price range on the next day, the 14th of May, was above the neckline. Classic upside breakout, except it wasn't really a zip, pop, bang rally and a high volume. It did get overbought. So what we got then is a failure at the end of last week, Thursday and Friday. Bad news. But I said yesterday and the day before probably that if it can turn right around and right away get back above that neckline, let's say by the end of this week, then I'll forgive this break below the line and go back to the head and shoulder pattern and the way it's supposed to act. But I'm afraid this could be too much damage. So I'm waiting for some definitive answer, and that would be starting to close again below 47.61 or above the neckline. And either one of those should happen pretty quickly this week. We got soybean meal. We do have an outside up day, a bullish engulfing. Unfortunately, it's not oversold, so it's not green. It could be a double bottom. A little too early to sell, to buy, but it's not doing badly. I like the bullish engulfing, especially at the prices that it happened at. I've got to get up to resistance 298. I've got to close above 290. Let's call it 300. Yeah, that'll do fine. And then we've really started to get above the resistance areas above 311. If all of that happens right away without any lower lows, then I'll start talking about something bullish on a longer-term basis developing. But right now, there's nothing significant here. This is terrible. Every month or two or three or four, you made new lows. And any rally that happened in the interim did not make higher highs. It just can't stay up at higher levels once it starts to make new highs, and it fails and makes lower lows. Don't fight it. Corn had a head and shoulder bottom. A couple of weeks ago, I erased the markings because this is way off on the timing and too low for the shoulder, and I just don't like it as far as the possibility of it being a shoulder here. So it did get oversold. It did bounce off of support. That's totally separate, and it is doing fairly nicely off of the support area. Now it's getting above a slight resistance area, previous bottoms, and it's looking a little bit more optimistic. But I'm really not calling it a head and shoulder bottom anymore. So I think we've got a little bit more of a rally coming short term. What about wheat? Well, oversold, way in new low ground. Minor bounce. I mentioned it coming up into this area where it now has reached probably 545, maybe even a little bit lower. And the first resistance area is now very close at 552, and we're at 46. So another 6 cents, 7, would get to the resistance level. I expect it to stop there. I expect it to roll over and start to make new lows again. If it doesn't, and it starts to close above 560 and break into new high ground for over a month above 570, now we might have something brewing, long-term bullish, but that's a ways to go. What about cattle? We got a sell signal on the exact high day last week. Great. It dropped like a rock the next day. Great. We've managed to come back very slightly Friday, a little bit more yesterday, and nothing so far, basically. Today, a doji. I think we're about to make lower lows very soon, below 205.30. First stop on the downside, 202.5. Next, and I do think that's going to be reached, 200, a little under 200, 199 more likely. And I do think there's a good chance of that being reached. Next, hogs dipping a little. We are definitely between a rock and a hard spot, and that started out way back February 27th. New lows oversold. Then we went up and couldn't go anywhere. Went down, couldn't go anywhere. Up nowhere, down nowhere. Got a buy signal at the bottom of the break here, but that's not legitimate. And I have a bone to pick with the TradeStation's data vendor. I told them to fix this, and they haven't done it. So we'll try to tell them again. And I have some other charts that have problems. I don't think I mentioned it. Some bad data yesterday a few times, and the E-mini no less, and another index, I think the SPY. So, sideways. Next, Shell, a stock. Now, resistance stopped the rally, and we've dropped back down a little bit. I don't see any problem here with making minor new highs again. We got a buy signal at the bottom of the market. That's great. April 9th. Proving to be a pretty good signal so far. We're dealing with a little resistance. Got to start closing above 67.90. Then an old gap is going to be attacked and closed, I hope. And we need to rally up to 69.30 to do that. Well, actually, I'm sorry, up to about 69.60. There's two gaps in the same price range. Then there's a gap up here, 71.84. Let's see how far I can get. Let's see how much of the gaps we can close. If you're long, periodically raise your stop up as the market starts to go higher. If it doesn't go higher and goes sideways, leave your stop alone or raise it very, 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 very little. If the stock market starts to go down, leave your damn stop alone, and that's why it's there to get hit and take you out. Next chart. Apple, interesting. Although it poked its head above the neckline very slightly, it's stuck today. Doji, inside trading range, right smack from underneath coming up to the neckline. And I still use that word, even though I'm not sure that that's going to be a good word to use. Yesterday, although most of the trading range was below the neckline, it closed at it, saving the day barely, skin of its teeth. Now we're still trading pretty much at it again, the neckline. So dropping down is going to make it worse, kill the pattern. The more it goes down, the more likely the pattern's dead. If it goes up any significant amount, it will save the day and be at or above the neckline, and that's okay. Now, if this pattern survives and it's on the verge of being killed or not, then the upside objective is pretty decent at 263. If it fails, then I've got to definitely expect a 193 and maybe even lower. We've got Tesla, minor new high, but overbought. Upside progress, losing momentum so far. No particular gaps to close last few days. There is one a little bit lower. Don't forget about that. We're still looking to come down to that gap closure. Probably, if we can break down today and get below yesterday's low, we will have a bearish engulfing red. And then we'll probably close the gap pretty damn quickly. But there's also a little bit of gap down here underneath the beginning of support. Support starts at about 290. Gap is around 278. And also a tiny one way down here, I'm not so sure is ever going to get closed. This is one of those gaps that just might not get closed. And lastly, Carvana. Got overbought, got up to and made new highs to the trend, and even on a closing basis. And it's staying there. We're staying above the old high, which was the bearish engulfing VR sell signal on the top of the market February 19th. Perfect. That's why I developed the strategy to come up with these signals, and it does often. So we need to close below today's low, which would be below the low of the last 4 previous days. And then we're probably going to come down to some support and close a small gap at 266 down to about 262. But I do like the upside at the moment as long as today's low holds. Whoops, had a disconnect. That will change real quick. Okay, and that's for another program. And back to the E-mini. We're getting close to the low. Hey. I'm not breaking out to the downside yet, though. You guys have a great day and profitable trading to you.